We saw a tremendous year for stocks in 2013 with the S&P 500 up more than 20%. The stock market since 2011 has pretty much gone up in a straight line. Normally every 12 months or so, the stock market declines by 10% at least once. And we've not had that kind of decline for 2.5 years, so it would be very normal and expected for some kind of pullback. I don't think there's an expectation of an out-and-out bear market or a crash in 2014, but I think after such a long and spectacular run, that perhaps the stock market may take a breather. US stocks look so much more expensive relative to European stocks and foreign stocks in general. So looking abroad is one place to look for the relative safety of cheaper stocks. And I think another place is to look for stocks that aren't Fed dependent. You know, one of the reasons why the stock market has done so well is that the Federal Reserve has been buying bonds to kind of juice risk-taking in the market. So the stock market has done well as bond buying has taken place and as the Fed has kept interest rates low. Because the Fed seems pretty close to the end of that program, I think going forward, a lot of people are looking at parts of the market that aren't dependent on that type of boost from the government. So you're looking at larger kind of multinational companies, big kind of industrial companies like a GE, like a United Technologies that have strong sales and strong profits. If there's any hint that they're about to taper off that bond buying, or if they're going to do something even more drastic than that, I think the markets will start to react in response. I think the parts of the market that you would expect to take the biggest hits are those that perhaps considered the most speculative, the most risky assets. So smaller stocks definitely would take a hit. And overseas, you're looking at a lot of emerging market stocks, which are very volatile. So much money flowed into the emerging markets in the last few years because the Fed has been keeping rates so low. If that policy goes away, that money starts to go away.